Hello, hello. Good morning, Trade Bros. Good morning, YouTube. Hope everyone is doing well. And today we had the CPI data that came out this morning. We just finished trading it in the live room with our traders. And what the hell is this? And something just popped on my computer and some camera stuff. But we just finished trading in the live room, and I was under the impression we get somewhat of a softer number. But there we go. Massive change up there. We've dropped now over 100 points in the S&P 500 from that CPI data. So there's three main numbers that I like to focus on today, and it is telling us that inflation has not peaked. Surprise, surprise. When we saw that weaker print for the month of July, everyone was like, oh my God, inflation has peaked. This is it. We're getting the turning point. That's just not true. We got a larger than expected little increase, right? A little increase, nothing insane, but it's just showing us that inflation has not peaked and the Fed is still on the ball to kind of subdue that. And that is going to be their main claim. And as we can see with the FOMC, Fed Watch Futures, one of our favorite sites that we like to look at here, there is now a 0% chance of a 50 basis point hike next week and an 82% chance of a 75 basis point hike, but also an 18% chance of a 100 basis point hike in the next meeting, which is going to be next week on Wednesday, which we're going to be trading live with our traders in our room. So even if we were looking for a slight little push, right? If you guys go check out on our website, we drop our our market analysis live. Well, they're not live anymore, but we drop them every weekend. And my top end target for this week based on distributions was 4160 to 4165 on the futures. And we've dumped ever since about 120 points from that level here pre-market. Now, why did this happen? What had happened there? We got an inflation reading on the core number at 8.3% versus the 8.1% expected year over year. So a slight increase. Or sorry, that's the general main number. The core number, if I said core, the core number, to correct myself, is 6.3% versus 6.1 expected. The overall number, 8.3% versus the 8.1 expected. So slight increase on those. The month over month number was an increase of 0.6%. So massive change up from what the expectations were, especially from the prior month. That inflation data, the CPI data has increased. Now it's going to be interesting to see. I haven't looked at this yet, but it's going to be interesting to see what parts of that CPI report had increased versus decreased. Because I know that crude oil, right, the energy prices have decreased. So that probably contributed to kind of subdued inflation. So if we do have the expectations for an increase in oil by the end of the year, right? If we have that expectation, we do see that price increase, especially with what's going on in Europe and the gas price increasing, a colder winter. We are going to see inflation continue to rise. Shelter prices are up, food prices are up. The mortgage rates, right, are up pretty drastically. We've also seen that housing prices have dropped and expected to drop based on Goldman Sachs report to continue into 2023. So a lot of this downside was propelled on an increase in the CPI data that came out this morning, right? And with that, a lot of people were expecting that last month was an indication that we top out in CPI. Now, remember, why is this important? Because the Federal Reserve's main goal this year and their massive economic gauge is how inflation is doing. Their main goal is to subdue inflation. The fact that we've seen even a month over month increase and a pop suggests that the Fed is going to continue aggressively tightening, right, by letting more and more bonds mature and pulling money supply out of the market and also aggressively hiking rates into the end of the year, right? So the expectation into the end of the year, if we look at this, there's a December 14th meeting. There's two more meetings after this one. Now, the vast majority of the expectations, right, 47% of the expectations lie in between 400 and 425 basis points for the federal funds rate, right? There is about 69% of an expectation for the Fed's funds rate by the end of the year to be 400 to 450 basis points. So that's what's causing a lot of this downturn, right? When we're quantitative tightening and we're increasing rates, right, we're making it harder to borrow, money supply is dropping, and wealth is decreasing, causing downshifts in this market. So a lot of people, even JP Morgan was actually talking about recently, recently, oh geez, I just lost my train of thought. JP Morgan was talking about a softer landing coming to fruition. And it was more and more likely that the Fed would kind of build up on a softer landing, which is probably not going to be the case. Even Kramer said that the most recent lows of 360s on the SPY would be the low of the year, and we're probably going to hold that. Just a few hours after that, the market just dropped on that inflation data. So the inverse Kramer ETF is at full go. In order for the Fed to go slightly slower and for the recent stock market rally off of the June lows to hold and persist, we do need that CPI and core CPI and core PPI, which is tomorrow. We have to watch the core PPI data as well to be below estimates. Now, that's not at all what happened, and this is what is propelling the downside today. So, based on everything else, right, there isn't too much to really consider. You can look at global inflation data and economic data, right? The start of the trading week was supposed to be all about the August inflation report, but also we do have some news out of Kiev. Kiev's sudden momentum has many hoping that this moment is a turning point with the war against Russia related. Edward Moya, a senior market strategist at Oanda, over the past few days, Ukrainian military forces have retaken nearly all of Kharkiv region that Russian forces had occupied since the start of this war in February 24th, right? And now appear to be moving ahead and consolidating their gains while the Russians still have the ability to regroup and hit back. So why this important, right? Why should we talk about this as well? Is because a lot of this has been dragging on the gas prices, on these energy prices that have been extremely high, and we've seen a lot of sanctions, and this is going to affect the eurozone, and the eurozone is slipping into what we can call a potential recession in the coming weeks or months or whatever the case may be. So it's important to keep tabs on that along with the inflation data out of the US. Now, what had happened here today based on this inflation data, we also have the PPI. Remember, we got PPI that comes out tomorrow. We have to keep an eye on that. But what had happened with this downturn in the market. Yesterday, we were talking about holding 4105, right? The 4105 region held really well throughout the day, and the weekly target for me was 4160 to 4165. Once that was tagged today, we got a massive decrease. What happened in that case? How do we read this? We dropped back below the 4105 on the S&P 500 futures, which escapes the current distribution block that was at the top, meaning you are going to see downward pressure into the new distribution blocks to the downside, which would be placed under 4082, which was a huge area today, which we traded off of in the morning room. 4082. Now, there's another level below that, 4055 and 4040. When you accept under 4040, which we just have, and we've rejected it, opening up for an opportunity, we are going to slip into a new distribution block that does take us down to 4002. Before that, we have 4030 and 4017. So watch those levels as well. But we are expecting to see the move into that 4002. Now, remember, we start slipping under 4002 into that region 4008. That is the next leg to the downside that can take us to the most recent lows. So what I'm going to be watching for today is for 4040 to hold out as a massive resistance, 4055 to hold out as a massive resistance, 4065 to hold out as a massive resistance. And if we give up 4065, I think that prices will shift a little more to the upside, especially above 4082. Now, that is a very far ways away. So the two main levels that I'm going to be watching for to see sellers come out are going to be 4040 to 4042 and then 4055-ish area. So with that being said, there is a little more downside here to start this Tuesday. We'll see how these big players come out on the open and see what the next move will be, right? It is very oversold. We've seen a drastic push to the downside. So seeing some kind of buy stops and maybe seeing some kind of sell after we get a little long into this play to reload the shorts wouldn't be out of the ordinary and out of the question. But you have to watch those two main levels, 4040, 4042, and 4050 to 4057 in that region. So keep those areas in mind. Keep the CPI data in mind. Tomorrow we have PPI as well, so that could shake things up. And let's have a good trading day. If you traded in the morning and you've done well, there's no necessary reason for you to stick around and watch this stuff. But if you haven't, tread lightly. There could be some volatility. There's 500,000 contracts traded pre-market on the S&P 500 futures, which is something that we haven't seen a lot. So again, just a little update. If you haven't, or if you don't know about the pre-market contracts, if there's a heavy flow of contracts that have traded pre-market, most likely you're going to get a little more volume and volatility throughout the day. So keep that in mind. And if you want to learn how to trade order flow in futures and options, go check us out. We have master classes on our websites, and also join our community, community.tradeproacademy.com. And it is a free community where you can jump in Discord with us and trade stuff like this. So I hope you all have a great trading day. Thanks for showing up, and I'll see you guys tomorrow. So thanks again. Take care, and let me know down below. Do you think that inflation gets subdued at some point this year? What do you think the peak inflation number is? Or do we continue to ramp up the inflation reading into the end of the year and go into 2023 with more quantitative tightening and rate hikes? Let me know what you think, and we'll see you guys tomorrow. Happy trading and happy Tuesday.